I will discuss in this video regarding cash receipt journal and cash payments journal. You know, in the past we had cash book, but now in the new syllabus, they have changed it as cash receipt journal and cash payments journal. If we just take recent papers, 2019, 2020, 21, you may have seen examiner has set a separate question from cash receipt journal, cash payment journal, sometimes purchases journal or sales journal with other ledger accounts. Therefore, this lesson is also important one for you to practice again and again and solve the questions at your exam correctly and neatly. So therefore, I will select the question came in the paper in the year 2019, paper 2, question number 4. In the fourth question, they have given you some opening balances. Madara Traders is a firm registered for VAT, value-added tax. The following balances were extracted from the statement of financial position of the firm as at 31st December 2018. Trade debtors 120,000 rupees, cash 30,000 rupees, trade creditors 70,000 rupees, VAT payable 30,000 rupees. They have given you some transaction occurred in the month of January. Then finally, they have mentioned, assume that there is no VAT on expenses. That means when you pay to purchase things, when you meet expenses, especially no VAT on expenses. Right. You have to prepare the following primary books of the business for the month ending 31st January 2019, cash receipt journal, cash payments journal, purchases journal. Part 2, the following accounts for the month ending 31st January 2019. Trade debtors control account, trade creditors control account, VAT control account, and cash account. You have got 20 marks, 1/5 of the whole paper. That is for this question. So preparing journals and ledger accounts are also important part at your examination, especially cash receipt journal and cash payment journal. But examiner will check other journals also, like purchases journal here, then sometimes sales journal, likewise. Then you know the format for cash receipt journal and cash payments journal. If you just look at receipt journal and payment journal, at the examination, you are not given the format like account equation, but here you should know the format. You should remember and draw the format on your answer script. Here, date column, description column, something big one, and the discount allowed column, amount, total amount you received, and you can have analysis column related to the given information. That is how you can classify the amount received from cash sales, VAT, and receipt from debtors, like that. You can classify. If I again explain, on the top you can write all the values in 1,000 rupees, 1,000, and cash receipts journal, date column, description column, and discount allowed to given column, amount column, and analysis columns like this, sales, VAT, and receipt from debtors. Because you can have receipt from customers, receipt from cash sales, like that. You can classify. Okay. Then when it comes to cash payments journal, also same, date column, description column, and discount receipt related to creditors, so supplies amount, total amount received, and how does it consist of? In the under analysis column, payment to creditors and expenses. Then if you take purchases journal format, date column, description column, amount column, VAT, and total amount. Likewise, you can first draw these three formats. You should be able to remember and draw the format. Then you can move to record transaction one by one. As they have asked you to prepare ledger accounts also, you can draw at the examination at once ledger accounts also. Then you can easily finish the question within the given time. Otherwise, you won't be able to finish the question with the relevant time. So you can draw other accounts also like this. Trade debtors control account, that is equal to maintaining asset account, debtors account. Trade creditors control account, that is equal to maintaining creditors account, so accounts payable, individual account. VAT control account, Here we prepare final VAT control account by cancelling input VAT account and output VAT account. We will be discussing VAT lesson in details later in another video. The cash account we maintain by using asset concept, right? Then when it comes to the question, you can just think of the given balances. Trade debtors 120,000, cash 30,000, trade creditors 70,000, VAT payable account 30,000. Therefore, you can record first these given balances in the relevant accounts like this. In the trade debtors account, asset brought forward balance 120,000, trade creditors liability concept balance brought forward 70, VAT control account balance brought forward 30, that is liability, and cash account given balance brought forward 30,000. Right, then we can discuss one by one the transactions occurred during the month of January. 5th January 2019, purchase goods 230,000 on credit from Amal Private Limited. This purchase includes VAT of 30,000. You are given the 30,000 VAT is included in this rupees 230,000. That means VAT 30,000 without VAT value, net value 200,000. As you are given names of the company and also they have mentioned on credit, therefore this transaction should be recorded in the purchases date. Purchases day book. We maintain purchases day book to record goods purchased for resale purpose on credit. Right. Then date 5th January, description Amal Private Limited, the total 230, VAT 30, and purchases 200,000. You can show the answer like this. When it comes to purchases day book, description date 5th January, description Amal Private Limited, amount total amount 230, VAT 30, net value 200. Amount means net value here 200. VAT column 30,000, total amount column 230. That is how you can record. Then here you can record first in the day book, and from day books you can copy those transactions to the ledger accounts. Okay. Then second day, 10th January 2019, sold goods costing 150,000 for 207,000 on cash. This sales includes VAT of 27,000. Right. That means you take this 207,000. 27,000 is VAT collected from customers. It is cash sales. Then in the cash receipt journal, you can take total value received 207,000, VAT 27,000, and net value 150,000. You can record like this. cash sales, date 10th January, description cash sales, and amount received 207. Then net sales 180. VAT, you are given 27. Total of sales, net sales and VAT should be equal to amount 207,000. Right. Then next transaction, 12th January 2019, received 110,000 subject to a discount as the full settlement of the debtors balance as at 31st December 2018. That means last day. Here received 110,000 subject to discount as the full settlement of debtors balance as at 31st December 2018 means they got money 12th January in the current year, but for the previous year sales, last day of previous year 31st December 2018. 110,000 they have got in cash, but the balance receivable is 120. They have mentioned a discount subject to discount. That means the difference 10,000 will be discount allowed to given. Right. Then discount allowed column 10,000, amount 110,000 total amount. In the debtors column 120. You can record like this in the cash journal. Date 12th January, receipt of cash from debtors. Discount allowed 10. That is the difference between amount received and the opening balance 120,000. Amount you got 110,000. Then total 10 plus 110, 120,000. That is the opening balance. Then under again analysis column, receipt from debtors 110,000. Okay, next date, 15 January 2019, settled the full amount due trade creditors as at 31st December 2018. That means trade creditors amount payable as at 31st December 2018 was 70,000. Then we have to record in cash payments journal like this. Cash payments journal, date 15 January, payments creditors description, discount received, no discount received, amount 70, and analysis column, payment to creditors 7, no discount. Right. Next transaction, settle the amount due to Amal Private Limited and a discount of 5,000 was received. Right. Amount Amal, settled the amount due to Amal Private Limited and a discount of 5,000 was, that is also paid. Because 5th January, goods purchased from Amal Private Limited 230, including VAT. Then 5,000 discounts and they have to pay balance 225,000. Then we record in the cash payments journal, 16 January payments to Amal Private Limited description, discount 5,000, amount balance 225,000. Again, under analysis column, payment to creditors 225,000. Right. Next day, purchase goods with the list price 360,000 for 345,000. List price means invoice price. It was 360,000 rupees, but they have sold it for 345,000 on credit. That means they have given a trade discount of 15,000 to the customer. We don't record anywhere the trade discount 15,000, but actual sales value is 345,000 on credit from Northern traders. This purchase includes VAT of 45,000. That means if you take net sales value 345,000, 45,000 VAT on purchase and 300,000 real purchase value. Then we don't record trade discount anywhere. Therefore, we take only net value 345,000 after deducting trade discount, and we have to get separated VAT and net purchases and record in the purchases date. 18 January date, Northern Traders description amount, that is net purchases 300, VAT 45, total amount 345. Here we don't consider 15,000 trade discount. Right. Next transaction. Sold goods costing 350 for 460 on credit to Jayamal PLC. This sales includes a VAT of 60,000. Right. That means the cost was 350, but they have sold it for 460. In the total value of 460, they have included VAT 60. Therefore, without VAT value is 400,000. Without value is 400,000 on credit. So we are recorded in the not in the cash receipt journal, not in the cash payment journal, not in the purchases journal. We should have recorded it in the sales table. Sales table. Sales table. Right. But we can, when we prepare our ledger accounts, we can directly take that transaction from the table. Right. Next one, paid office expenses 60. Right. That is expenses. Office expenses. Then we come to cash payments journal. Here, office expenses date 28 January. Amount 60. Analysis column under expenses column 60. Okay. The next transaction, received 360,000 rupees from Jayamal PLC as a part settlement of the amount due. Amount due. Right. Jayamal PLC as a part settlement of, right, 360. Actually, Jayamal PLC customer then we have got money from Jayamal PLC. They have sold goods costing 354, 460 Jayamal PLC, no? Then actual sales is 460. Out of 460, they have got 360 from Jayamal PLC. Then it come to cash receipt journal. Cash receipt from Jayamal company, amount 360. Analysis column under receipt from debtors 360. Right. Then that is how you can record transaction in cash receipt journal, cash payment journal, and purchases journal. Assume that there is no VAT on expenses, right? Now we have already recorded all the transaction in the given 3 journals. Now we can consider each journal and take the total. Cash receipt journal, here discount allowed total 10, amount total 677. When it comes to analysis column, sales total value 180, VAT value 27, receipt from debtors total 407. Cash payments journal, discount received 5, amount net value 355, and analysis column, payment to creditors total 295, expenses 60. When it comes to purchases journal, VAT value 75, net purchases 500, total amount 575. Then in the second part, we are asked to prepare trade debtors control account, trade creditors control account. It is equal to preparing individual debtor and individual creditors account. But only difference is we record in these 2 accounts total value. We pass a double entry in the general ledger. including control accounts, but we can have nominal entry in the personal ledger also, in both in debtors accounts and creditors accounts. Here we have already recorded opening balances given in the question. Then, as we asked to prepare ledger accounts, these ledger accounts, then from cash receipt journal, first we take discount allowed. 10 discount allowed is lost. We can debit to discounts allowed, and in the general ledger, credit to debtors control account. 10. Here 10 discount allowed account 10. Why? Discount allowed will affect to reduce the asset debtors control account. That's why we have created 10. Here we are not asked to prepare discount allowed account, therefore it is not there. Right. Then when it comes to analysis column, sales total 180. From sales you have received 180, then we can credit to sales account and debit to cash account, double entry. Here we don't prepare, we are not asked to prepare sales account, then credit entry goes to sales account and debit entry goes to sales account, cash account, debit. Why? Asset increase concept debit. When you take money from cash sales, we debit to cash account, right? Then again you come to VAT column. Here VAT regarding sales, that's a liability. Therefore, you can, here you have already collected money. Therefore, VAT 27, you can debit to cash account because you have got money, and credit to VAT control account 27, double entry, cash account debit, VAT control account credit. Why? We have to return what we collected from customers. It's a liability. Therefore, we have to credit VAT control account credit 27. Then receipt from debtors total 470, double entry. When you receive money from debtors assets will come down. Therefore, 470 we have credit to debtors control account 470 credit. And cash account debit 470 because asset increases when you receive money from anybody. 470. Right. Then we recorded everything from cash receipt journal. We come to cash payments journal. Then in the cash payment journal, we have first column discount receipt. Total goes to discount receipt account credit and debit to creditors control account. Why? Discount receipt will affect to reduce liability, therefore creditors control account debit. Then in the cash payments journal, an analysis column payment to creditors 295. When you pay money to creditors, cash asset decreases. Therefore, you have to credit to cash account asset decreases concept and debit to creditors control account. Cash, say in cash account, because when you pay money to settle liabilities, the creditors liability will come down. Liability decrease debit. Right. Then in the cash payments journal, we have another one on the analysis column, expenses 60. Therefore, expenses, relevant expense account debit and cash control account credit 60, like this. Why? Because of meeting expenses in cash asset decrease 60. Right. We finished posting values from cash receipt journal to ledger, and secondly, cash payments from cash payments journal to ledger. The third one, purchases journal total. We take 500 and debit to purchases account. Why? Expenses increase debit. Therefore, we debit to purchases account. Here we are not preparing purchases account. We are not asked to prepare purchases account. And credit to creditors control account 500. Purchases, net purchases 500. VAT on Purchases 75, total 575. That is from total amount. We have to pay total amount to the supplier. The supplier will return back to the government. Net value, they keep it value. Right. Then we'll move to debtors control account. Then from debtors control account, we have everything recorded. When it comes to, we had one transaction. What we couldn't record in sales journal because we are not asked to prepare sales journal. But here we can again come back to the question. 20th January 2019, sold goods costing 350 for 460 on credit. To Janala, this sales includes VAT. Here VAT collected from. In the future, they will fail. But we have now account for those things. VAT on sale, this credit sales 60. Therefore, debtor or debtors control account credit 460. Debtors control account 460. Separate to sales net value 400. VAT control account 60. This is liability that you should collect from customers. Therefore, VAT control account credit. Here, debtors control 60. Here, debtors control debit, VAT control credit. Then sales amount on credit sales, total sales amount goes to sales account credit and debited to debtors. Because if they have mentioned sold goods on costing 350 for 460 on credit to Jaya. Right. 354, 460 on credit to Jayamal PLC. Then debtors control account 460, including 400 net sales and VAT 60. VAT goes to VAT control account credit and sales account goes to credit. Debtors account 400, debit sales account credit, VAT debtors control debit and sales account, sorry, VAT control account credit. Likewise, we can pass double entry. Then the creditors control account, business has paid in cash 295, discount received 300. The 295 you can credit to cash account, right? Like this, you can prepare cash account. Final balance you can take 352 and VAT control account. Balance 442. Likewise, it's easy for you to prepare cash receipt journal, cash payment journal, purchases journal, or sales journal, and ledger accounts.